Yo, what's going on, guys? Super excited to be here with you guys and make this video. This is going to be the first of many, hopefully. For those who don't know me, my name is Justin. I go by Starboy. And in this video, I want to really break down this USDCAD setup we had. It's a beautiful opportunity, great risk to reward, currently floating 314 plus pips. And I want to break down how we were able to catch this opportunity. I'm show you guys some before and afters when we actually took the trade, and then the re-entries we had all throughout this opportunity, right? But guys, this is a great trade. It was based off Wyckoff. This is a trade that was early June, but I'm going to show you guys the whole breakdown and understanding of it, so you guys can understand how I was able to combine smart money concepts, how I was able to combine Wyckoff, and then how I was able to combine some market geometry into an opportunity to give me the best possible risk to reward setup. So that being said, guys, we're gonna go ahead and dive right into it. So what I want to do is I'm actually gonna pull up a brand new USDCAD. I'm gonna pull up a chart that I've never clicked on or done anything on. So here's USDCAD. Let's go ahead and delete this, and then I'm gonna go ahead and start off by really just saying that the way we like to interpret the market is different than the general bias, right? The way I like to interpret things is more so based off of market facts compared to market theory, right? A lot of people trade on market theory compared to market facts. Now, what is market theory, family? Market theory is the theories of how price is moving, right? So example, most people in this retail space will tell you that if you have a trend line, once the market hits a trend line 2 to 3 times, it's such a solid trend line, right? But why is it that once the market comes back to this trend line, you look for an opportunity to go long, you look for opportunity to buy this up, which basic education is telling you, but ends up teasing you a little bit, and then it just goes all the way down to hell, stops you out, and you lose. Why is it that market theory doesn't work every time, but market facts is something that's continuous, right? We're not trading the theories in the market. We're not trading the basic patterns in the market. We're trading the facts in the market. Now, the facts in this market is that eventually price will be oversold and overbought, right? Now, the one of the key things that came into this opportunity was Wyckoff Schematics, right? Now, for those of you that know what a Wyckoff schematic is, I'm going to break this down. For those of you who don't, Richard Wyckoff, he lived in the late 1800s, early 1900s. He's one of the godfathers of technical analysis. He's up there with some of the greatest of all time, right? Now, what he came to conclusion with was that he came to conclusion that the market has different cycles, and if you can understand these price cycles, you can be successful. Now, here's a basic principle of a Wyckoff price cycle, right? Now, in this price cycle, we talk about accumulations and we talk about distributions. And really what's happening is just supply turns into demand and demand turns into supply. Now, to break that down into the simplest terms, what does it mean? It means eventually the market's going to be dropping for so long, it's going to come to the end of a sell. It's going to come to an end of a cycle, a bearish cycle, and it's going to slowly start to consolidate or accumulate, where there's so many sellers in the market where the sellers are starting to scale out of their positions and the buyers are going to start entering before the market expands. And this is the basic principle, right? The basic principle is this: you're going to have some chop in this range, and then you're going to have a big move to the upside, and then eventually it's going to be overbought. You're going to have some chop in this range, it's going to distribute, and then it's going to go to the downside. Now, that's the basis of the idea, but when you actually start learning about it, you can go to this free website, Stock Charts, type in Wyckoff Schematics on Google. This is free. I didn't make this up. This is all free. This is information that's available for you. But what we did was I looked at this accumulation schematic 1, right? Now, if you just spend the time and read this and try to understand what all these little things mean, you can start seeing this in the market and understand what's going to happen next in these specific cycles. So let's start off with this cycle on USDCAD. The first thing I saw on USDCAD was looking at this from a higher time frame perspective is, we've been bearish for a very, very long time. We've been in this bearish market cycle for a minute, right? Right now, in the sense of the daily time frame, we're currently trading in this range, right? And what I mean by this range is just understanding how the trend really works, right? You know, the way I interpret the charts is I'm not looking at the charts as candlesticks or wicks or anything like that. All I'm doing is I'm looking at an uptrend like this. I'm looking at a downtrend like this. I know that I need to be looking for buys in an uptrend. I know I need to be looking at sells in a downtrend. That's the basics of trading Forex, honestly, right? Now, everything else is just to make things more accurate, more pretty. I know that overall in this range right now, this is a downtrend, but on a lower time frame, we're seeing something else, right? One of the biggest things that I factor in and what I like to explain is multi-time frame analysis. Understanding that price doesn't know time and time doesn't know price. You might see all these different time frames up here. I'm using all of them. All of them show me the same thing, and they also show me something different. Really quickly, let's say the daily is black. Whoops. Let's say the daily is black. 4 hour is blue. Say 4 is blue. Let's say 1 hour is red, right? Just for this example, here's a little map for that. Let's say on a daily time frame, this is what the market is looking like, right? We're going up. But if I scale into, let's say, a 4 hour time frame, I can start seeing the market actually creating higher highs and higher lows and so on and so forth, right? So understanding where I'm at in the trend is so important, because looking at this higher time frame, the market's just going straight up, right? We'll look at this. We'll say this is the daily, this trend line I drew. Say that's a daily time frame. On the daily, this market's going to look like it's going up. But when I zoom in to the lower time frames, example 4 hour, now I get to start seeing the chop. Now I'm starting to see the noise a little bit more, right? Now, what's going to happen is on the daily, eventually price is going to pull back, right? And we can expect that. But what you got to understand is you got to understand how to see when price is changing its directional bias on a lower time frame, right? Maybe on the 1 hour, this is looking like a very bearish market, but in reality, it's just working its way into a key level within order flow for price to go higher, right? So on a daily time frame, you're seeing this, but when you zoom in to the lower time frames, there's multi-time frame analysis that you got to keep in mind, right? You know, there's so much going on, and you know, it's your job as a trader to understand what is really good in this market, right? So understanding this little diagram is super key, but this is multi-time frame analysis in the essence, right? Now that we understand that, let's start scaling in and breaking this down. So we're seeing prices. Once again, let's look at this model. This basic principle of trading. We're seeing that price is oversold. We're seeing prices is going lower and lower and lower, and then we start to see signs of it starting to accumulate, right? Now, when it comes down to it, what I want to show you guys is, let's go to the 1 hour. Let's go back to the 1 hour. And what I started to see was signs that we were going to start this Wyckoff price cycle, right? So in this price cycle, the first thing that we noticed was this right here. This is called our SC, or the selling climax. This is like the point where the last little bit of sellers are coming into the market. You know, they missed out on a lot. They're coming in late, right? Right after that SC, we saw we had a AR, automatic rally, right? Now, when it comes down to it, family, it's never going to be perfect, but it could be pretty damn close, right? So we had an AR going to a secondary test, right? We had a ST, secondary test. ST, I like to call that a secondary test. For the sake of this example, I'm just going to put a horizontal right here. I'll put a horizontal right there. Now, let's say before any of this price existed, actually, we don't need the replay tool. Let's say before any of this price existed, we just kept on following the trend. After that, we had a STB, a secondary test in phase B, right? Now we can put STB there. And we also created liquidity, aka equal lows, right? We created liquidity below this low. There's also liquidity below this low, right? The next thing is going to be the spring or the shakeout, right? The spring come in here, spring. And we also had what I like to call a liquidity grab. Liquidity grab means they grab the liquidity and they move price very aggressively in the opposite direction, right? So we had this liquidity grab. Now, based on my understanding of learning this Wyckoff schematic and learning more about how price accumulates and distributes, you might not catch an entry on the spring, but you can catch an entry on the test. Now, this is where you start combining, multiple time frame analysis, scaling into all the different time frames and getting in, right? So I knew that this was the rough general area of this spring. Now, what I did, ladies and gentlemen, was very simple. Very, very simple. I started looking at all the different time frames, and I started looking for that largest candle down before the move up, right? Now, what I ended up finding was this 2-hour candle, and we see price come and mitigate right out of that candle or give us an entry opportunity, right? Now, before you say, oh, it's so easy to see this in hindsight, okay, well, let's look at it like this. This is a screenshot I have from June 1st. I had the SC, AR, ST. I had that equal low set up. I took a setup from here, and I took this up. I ended up cashing out. I wanted it to come up here and, mitigate this. And I wanted to try to sell it down, but it didn't happen. But what did it do? It provided this spring. Even though it wasn't as deep as I predicted it to be, we still had a spring, AKA we had price come and take out the liquidity below these equal lows and the liquidity below this secondary test, right? So boom, that's my understanding to know that this was a sell to buy candle, right? From there, what I saw was price came and mitigated that candle perfectly, right? So in this next screenshot, what it ended up happening was, I don't know if I have all of them, but this was the original entries that I scaled into on this opportunity, right? Price came into that time frame. Even though my entry wasn't as perfect as it could be, I got a pretty good entry, I'd like to say, right? Now, from here, what did we see was I saw some upside targets. I seen another area where we had relative equal highs or a point of liquidity, right? Liquidity means people's money. It means where people are placing their stop losses, where people are placing their buy stops and sell stops, where people are putting orders and there's money trapped, right? Those are targets. Now, what had ended up happening was very simple. I ended up taking partials around this range right here. I wanted to hold these trades all the way. I wanted to hold these trades right here. I wanted to hold these opportunities all the way up here and partial up there. What I started noticing was divergence, right? I don't use indicators, but the one indicator that I do like is the MACD. I'll go over this in another video, but what I was seeing was the strength the MACD was showing was exiting the market, but price was going higher. It didn't really necessarily make that much sense, right? Now, when it came down to it, if we take a look at the volume, wow. Okay. So I guess forex.com doesn't allow volume, but, for this example, I was looking at the volume. I was seeing volume diminish, right? Now, I ended up taking partials, price pulled back. No big deal, right? Because we've already shifted directions, right? We've already had breaks of structure. We broke structure right here, and we also broke structure here, right? So we had breaks of structure. Now I know we're in an uptrend, right? How I knew that was this was a, we're in a downtrend overall, right? We're in a downtrend overall. This was that lowest low in our downtrend. These were previous lower highs. So we can say that was a lower high. We can say this one was a lower high. Now I know when price breaks a lower high, it's now an uptrend. I know that we're going to see some type of retracement and then to go higher. So the next opportunity I ended up getting into on, I didn't break this down, but the stop on this was pretty tight real quick. I'm going to go over the target and everything too real quick before I move into the next opportunity. But let's go back to that 2-hour candle. And, the stop was relatively small. It was like, it ranged from about 15 to 16 pips. So I'm just going to put the stop right here below this. But that was a stop. And overall, I'm looking for a very big swing. The way I like to take opportunities in the market is I'm swinging these opportunities for the distance, right? So, I was looking at this range right here. I see that price left a big imbalance right there. And I see this last wick up that took out the liquidity that was sitting up above all of these highs, right? So I had an upside target for somewhere up here in this range, right? About 500 plus pips. Now, zooming back into this lower time frame, I'm going to show you guys how I kept getting in and kept scaling in. I'm going to delete that for the time being. Now, on the next opportunity I was looking to take was this. So I took my partials here. I'm still holding. Price pulls back. I'm looking for opportunity. I'm looking for opportunity. I'm looking for opportunity, right? I end up seeing this area or these lows. The first thing I thought was, okay, these look like general equal lows, right? Now, the next thought process I had on this this specific area within price was that, all right, on the DXY, so let's do this really quickly. On the DXY, on the DXY during this time frame, this was June 9th, right? At this time frame on the DXY, the crazy thing was I saw this same candlestick, right? I knew that this was my institutional candle, my institutional sponsorship candle, or my my manipulated candle, right? So because I knew that this happened on the dollar index, I knew that price would come back to this candle and mitigate. Now, we had some crazy wish-washy news, but what I did was I took the rough average of this candle, I took the equilibrium, I took the 50% of this candle, and from taking that, what I ended up looking for was a position right here at the 50%. Cool. I had a stop loss here. And then once again, you know, I was you know, on this specific opportunity, I was just going for these highs, right? Now, I took that. Let's go to, okay, so this was the original position. Now, here's the next position I took. This was a 5 lot right there. Now, I had measured out that 50%, and, you know, I didn't get a perfect entry, right? I got like 2-3 pips off. That really doesn't matter. But I want to show you guys, as I was trading this, how my thought process was going. Now, as I'm trading this, what I noticed was that price went up, and we broke these highs, but we actually ended up mitigating this last candle up before this moved down. Now, we had this push down, which was fine, but I didn't let this necessarily scare me, because you got to have faith in your opportunity, understanding what you're seeing, right? Now, I know that this schematic takes a while before it really takes off. So what was I doing was I scaled into the lower time frame now. I went down to the 30-minute time frame. Now, off of this 30-minute time frame, I ended up finding another candle, right? The candle that moved, the candle that mitigated this last point of interest created a new point of interest candle, right? Whatever you want to call it, an institutional candle, you know, a point of interest, whatever. In my book, this is a point of interest. I like to call these point of interest. So I caught another entry right there at the 50% of this move, right? Now, by doing so, this opportunity gave me an even better risk to reward, right? This was about an 8+ pip stop. And this gave me a risk to reward of about a 1-8 with another 1-8 we were riding with, right? So now let's say we had this, it took us up, and then let's say the next position. You know, there's no cap in the wrap. So we had the original position off of that 1-hour candle, and I came in off the 30-minute, and I caught another one. Then we took this thing to the moon, right? Now, when it comes down to it, we talked about a few different things in this specific opportunity, but the key thing about this is you always want to partial out, but, you know, when you're seeing these Wyckoff schematics really play out, I mean, the power of holding these opportunities, and even if you partial out, you know, your risk to reward will be smaller, obviously, because you took the lot size out. But guys, I mean, you know, 1-37 opportunity if we let it run, if we're still letting it run, right? You know, and it's all based on you. But, you know, right now we have an overall TP off of these 3 positions. We still have targets. We still have targets to the upside on these 3 opportunities that we talked about. And let's say we even just come up into here and just catch that 500 pips off the original position, 466 off the second position, and 450 off the next one. Well, guys, look at this. This is a risk to reward of a 1-27. This is a risk to reward. This next opportunity was a, sheesh, I can't even see that. Let me break this thing down. This next one is like a 1-47. This next one could be a 1-55, right? Now, the power in swing trading, the power of understanding these concepts is super huge. Now, in this video, I wanted to just kind of go over this and break this down. And obviously, you know, show you guys some before and after, so you know there's no cap in the wrap. I wanted to, you know, show you the actual positions I was taking on MetaTrader as I was taking it. I didn't screenshot the original ones on this. You know, I did catch the entry on that one, and then I did try to catch that opportunity on this one, right? But when it comes down to it, what I want y'all to take away from this is simply what what I want y'all to take away from this was simply that, you know, you can come in, you can start combining multiple time frame analysis. You can combine different ideologies of how you anticipate the market. And when you put them all together, you can start catching good opportunities. Now, the last thing I want to talk about is this. Because we've created this, now we have a big opportunity to go higher. So, I mean, after you watch this video, I would say, you know, if you catch any retracements off USDCAD, you know, we can still go a lot higher. There's hundreds of pips in this opportunity available. And respectfully, you know, you never know what's going to happen with the Feds and the Reserve and everything right now. You know, we had FOMC yesterday. But guys, with that being said, I hope you guys enjoyed this video. You know, this is the first one of me breaking down the charts, breaking down why I took these trades. If you enjoyed it, go ahead, like, comment, and subscribe. You know, I'd really appreciate it if you guys went ahead and like, comment, and subscribed. And the reason being is if you guys do give it a thumbs up, if you guys do subscribe, if you turn the bell notifications on, that gives me more of a desire to make more content for you guys. You know, I want to start providing free value to the field. I want to provide free value to the entire niche and people that are just wanting to learn how to trade, right? You know, trading is something that, you know, changed my life forever. And because of this information, because of the skill set, I just want to pay it forward. So I'm going to be making a series of, you know, free videos on YouTube for you guys to learn from. And if you enjoyed this video, once again, leave a like, leave a comment, subscribe, tag the homies. And I'll catch you guys in the next one. Appreciate y'all for watching. Peace out.